economists fear another possible contraction on the economy in the third quarter, and this, of course, follows a release of retail sales data today. So Statistics South Africa rather saying that retail sales growth slowed somewhat in August. And joining me now to unpack these figures and more is Viv Govender from Rand Swiss. Viv, as always, many thanks for your time this evening. Let's start with those retail sales. A bit of growth here and a bit of negative growth on the other end, a bit of a mixed bag. What did you make of them, and do you agree with sentiments that we might see low economic growth in Q3?
Unfortunately, yes, and I don't think Q4 looks any better if these load shedding issues go on for much longer. Look, we were already expecting sub 1% growth rates for 2019. The World Bank had already done that. I think much of the estimates out there for the country had already gone that route. And this comes from being about 1.7 to 1.8% at the start of the year, early last year. This year has been very disappointing. Even though we had a very low target for growth rates, it's been much worse than expected. And unfortunately, this is a pattern that has been going on for about 5 or 6 years or so. Every year, whatever the expected growth rate for that year is, you cut it by half, and that's pretty much what's going to be the actual growth rate for the year at the end of it. Right now, consumers are under pressure. There is not much real wage growth in the country. Unemployment, as we know, has been increasing. We've seen huge job cuts, in some of the biggest sectors out there, mining, banking, and I think right now consumers don't want to be spending money if they can avoid it.
So basically it renders the rate cut we saw a few months ago and the no rate cut or increase we saw in the last MPC meeting a little bit redundant.
Not quite really. I mean, they always say interest rates are like a string. They can pull you back, but they can't push you forward. So interest rates are there mainly when the economy is overheating. So if things are basically getting too, aggressive in terms of spending, in terms of inflation and so on, you increase interest rates to kind of pull things back. But relaxing interest rates don't have a clear link between, low interest rates and high growth. If we did, Japan would be one of the fastest growing economies in the world because they've effectively had zero interest rates for about, 3 decades now. Europe would be growing very fast because in places like Denmark, for instance, I think they have negative mortgage rates. You go borrow money from the bank, they will pay you for the privilege of lending you money to buy a house. Can you imagine that? And that's the kind of situation we have in other parts of the world. So it's proven that very low interest rates don't actually cause you to grow faster. They just remove some of the impediments. They're not sufficient, they're necessary, but not sufficient to cause economic growth to increase.
Another important story we're tracking today is the reaction of the Rand, the immediate reaction of the Rand that we saw after Eskom made its announcement about load shedding. Some analysts indicating that if there's no clear policy certainty, it will remain volatile. And what does this mean for the consumer, essentially?
Look, we are seeing some strength eventually returning to the Rand because of the Donald Trump towards China possible, deal announced end of last week, handshake deal, nothing, in writing as yet. The Brexit hopefulness that we saw at the end of last week as well caused the Rand to strengthen dramatically. This surprise news is obviously negative for us. The Rand should be, getting a bit stronger at this point in time. It's far, far too weak compared to where it should be, according to fundamentals. But these kind of factors around basically concerns about the actual ability of this economy to grow faster than it is right now is really worrying. Think of it this way. Eskom can't provide enough electricity for South Africa when it's growing at about 0.5 or 0.7%. What hope do we have to have no load shedding when we want to grow at 3 or 5% a year? Not possible.
Scary, scary stuff. And another growth story that I want to talk about, or lack of growth story, is EOH and the drama that surrounds them and the significance of that story. Just a brief unpacking of that scandal. Well,
basically, EOH. Don't know who exactly, but there's been some bad activities happening there. Activities bad enough that they've lost licenses from companies like Microsoft. Microsoft doesn't want to deal with them because they think they're just too much of a reputational risk. Okay, so the companies had huge issues with regards to just management. I think they've actually filed complaints, criminal complaints against some ex-employees at the company who have done deals with government that are not exactly above board. Now it's going to try and do a bit of a rebranding, a bit of a turnaround strategy, and one of the ways they're doing that is going to sell some non-core assets, things that are not crucial to their business. EOH, one of their strategies initially had been to acquire stuff and then add on more value. So they were really badly hit by this downturn. So what they would do is they would basically get wealthier. They'd use their shares to go and buy another company and apply their magic sauce in inverted commas to that new company and cause that new company more valuable, cause the whole company more valuable, then use those shares to basically buy new companies. They were on an acquisitional trail, trying to basically get bigger and bigger and basically use their special management ability to basically make those new companies that they acquired more valuable than what they paid for them. It turned out a lot of that management ability, a lot of that special sauce was fraudulent, was not above board, and therefore the company share price dramatically decreased. We had the old Equals Head come back to take over for a little while. They've had what they think is a change in management that's going to make the company more valuable going forward, or more viable going forward, not more valuable, more viable. They're trying to cut away the rotten parts of the company and try to get rid of things that they don't think are core to the company. And the stock market liked it today.
No, we did see that share price movement as well. I always feel a little bit sorry for Stephen Van Coller and the situation that he finds himself in. Viv, many thanks for your time this evening. I've been speaking there to Viv Govender from Rand Swiss.